Hello and welcome everyone to the week ahead commodity report. So first of all, what do you need to know as we go into next week? Hedge funds and money managers, they have again significantly increased their net long positions in COMEX gold in the latest week. Meanwhile, money managers have also raised their net long positions on US crude futures and options positions in the latest week. Now, gold prices last week exploded to the upside, breaking out to 1,500 US dollars per ounce. We covered this in detail on our midweek report, Gold Asset of the Day, where we were expecting a rotation back towards that 1,500 level to tap that zone of resistance. I'm pleased to say that a lot of you that follow us on YouTube have also capitalized on that big breakout on gold in the latest week. We've continued to outline that we perceive pullbacks as buy opportunities on gold, particularly on the FOMC statement where gold prices, they rolled over, tapped 1,400 US dollars per ounce. That gave a perfect entry to look for long positions, as we've seen now the best week on gold in over 3 years. In fact, we banked 2 positions this week on gold, one for 700 points and another for 800 points. Gold here breaking out to 1,500 US dollars per ounce as dovish central banks, escalating US-China trade tensions and negative debt yields around the globe have all kept prices at 6-year highs. In fact, we've also seen gold priced in Australian dollars and also gold priced in the British pound, breaking out to all-time highs in the latest week. So again, well done to all of you that also capitalized on these large breakouts with gold. Oil last week, we did see a rise towards the end of the week on Friday, breaking out to the upside over $1 per barrel, supported by a drop in European inventories and also OPEC output cuts. So with that, we'll move over to the charts and we'll talk you through the key levels and what we're looking at as we go into next week. Firstly, this week, we're going to start off with silver, which over the latest week broke out by more than 4% to the upside. We've finally cleared and tapped 17 US dollars per ounce for silver. However, over Thursday and Friday, you can see where we're consolidating. We have 2 inside candles on the daily chart, and we do have some indecision here as we go into next week. Now, one of the points that I want to make you aware of as we go into next week is that retail traders, 90% are now long on silver going into next week. So for me, from a contrarian point of view, that is a bit of a concern. We have also seen hedge funds and money managers, they have reduced their net long positions in silver in the latest week. So what does that mean for you? Essentially, you want to be watching silver because if we were to roll over, break back below Thursday and Friday's lows here, this is where we could start to see a more sizable correction to the downside, which could lend into a pullback and then finally a buy opportunity ultimately for silver here. But at the moment, we could see the potential for some profit taking as we go into next week. So just be aware of that. Right now, I am watching out to see whether silver will creep lower at the beginning of next week, break back below Friday and Thursday's lows and make a meaningful pullback, which could then provide an opportunity to get a better entry price on silver, with the view that we will see more upside as we get towards the end of August and then into September as well. So that's one scenario which I'm looking out for. And again, hedge funds and money managers, they have reduced their net longs on silver in the latest week. Given that we have had such a considerable breakout to the upside, we're likely to see some profit taking at these levels. Now, we may not get a pullback on silver which has any sort of magnitude behind it. So if we just consolidate next week on silver and we don't see much of a pullback, what I would then look out for would be the potential for a bull flag here, just a pause in price action around the monthly pivot, then springboarding higher for another reattempt to break above the swing highs, back above $17 per ounce, and then really making a move back towards the next key zones of resistance overhead. And of course, the next magnetic levels for silver would be $17.50 and then a move all the way up to $18 if we only get a temporary pause in price and then we springboard higher going into next week. But for all the reasons I've just mentioned, I would be a little bit careful here in that we might see a further pullback on silver going into next week, given that we have seen over a 4% gain in the latest week and we could see some profit taking as well. which then brings me over to gold. So gold over Wednesday, Thursday and Friday, we've had 3 taps here around the 1500 level, just above that zone. You can see we're finding resistance at 1,508 US dollars per ounce as we go into next week. Yet again, well done to everybody who capitalized on the recent breakouts with gold. It has been the best week in 3 years for gold, and we've continued to demonstrate to you the major levels that we've been looking to buy into gold each week, and we're very pleased that a lot of you that have been following our analysis have also been able to benefit from the recent breakouts, and rather than try to sell short at these recent highs, a lot of you have been on the right side of these moves, which is perfect. So what are we looking at now as we go into next week? Well, it's been over $100 move on gold in the latest week, so a 1,000-point move if we consider where the price action was around the FOMC statement just over a week ago, and then the top recently of $1,508. We've seen over a $100 move to the upside for gold here. So we need to take a close look at that 1,500 level going into next week. I would really need to see a break and a close above that level in order to suggest next week we're going to then start to see the price climb higher back towards the next major levels of resistance, which I'm looking at $1,525 initially, and then eventually a tap up to the 1,550 zone. However, at the moment we're pausing at 1,496 US dollars per ounce into the close on Friday. You have an inside candle here on the daily chart as well. If we start to see silver prices pull back at the beginning of next week, I would look at a bit of a pullback here on gold. We are now flat on gold. We've banked, as I mentioned, 700 points at the beginning of last week and 800 points midweek as well on our 2 positions. So we've banked 1,500 points profit in the latest week here on gold, and we're now waiting to see how the price action develops at the beginning of next week. If we continue to pull back lower, I would then be looking for evidence of buyers to come in. If we do get a tap back down towards the lower end of these channels, these are zones that I'm going to be looking for evidence of buyers to come in the next week here, and within those levels I would be looking then to re-establish additional long positions with a view that we're going to see higher prices as we get towards the end of August and into September as well. Okay, so that's what I'm looking at as we continue to progress throughout next week. If we do get a pullback there, I would look for buying evidence to come in and then looking at opportunities to buy into gold on any additional pullbacks. But it is possible that we will only have a shallow pullback going into next week, and if we can break above the last consolidation here, this is where we could really start to see gold springboard higher, and I would also look at the potential for breakout trades there as well if we just get very shallow pullbacks on gold going into next week. Again, the key points to note here at the moment are that gold has had its best week in 3 years. We've certainly been able to capitalize on that breakout to the upside. We've seen hedge funds and money managers, they have increased their net long significantly in the latest week. From a seasonal point of view, usually the end of August moving into September is a strong time of year for gold. However, in mid-August we can get a little bit of a pullback here, and we seem to be finding some resistance around the 1,500 level at the moment. To get more updates on that going into next week, make sure you also subscribe to our YouTube channel so that you're kept updated with gold. Asset of the day, we'll be putting out a midweek report and we'll go through the price action in more detail and our forecast for the week ahead too. Which then brings me over to oil. So oil, we have finally had a rollover and tap all the way back down to $50 US per barrel. You will see what a key magnetic level of support that has been for oil, even going back here, going all the way back to January of 2019, where we've seen a lot of support at that $50 US per barrel handle. We've tapped that level midweek on Wednesday after a build in US oil inventories. We've since had quite a significant rebound, over a $4 move to the upside, and on Friday over a 2.75% move to the upside for WTI crude oil. Now, what I want to look at as we go into next week, given that we have come into a little bit of resistance here, and we've also tapped a previous trend channel here, which is now providing a bit of resistance as well on the chart, I want to see whether oil is going to be able to follow through further going into next week, or whether we see some sort of pause at this level and roll over for another retest back towards the lower end of this channel again. If oil is able to have a meaningful breakout at the beginning of next week and break and close back above $55 per barrel, we then could certainly set up for much higher prices as we continue towards the end of August and go into September. As I've mentioned before, at the end of the month, the oil prices can really start to build up momentum, and then with a seasonal play into September. Want to see whether we will get a slight rollover in price going into next week, which could give a better entry as we continue to develop throughout the month of August and into September as well. That said, if we don't see any sort of pause on oil, and especially given that hedge funds and money managers, they have increased their net long positions again in the latest week, if we break back above $55 per barrel, you're going to be then targeting the midpoint of the channels here, which is going to reside at approximately 56.50. Next major levels of resistance above that will be 58, and then a revisit back towards $60 per barrel. Now, that won't all happen in 1 week, but those would be the next levels I would look at if we start to build a more meaningful base, and if we can break and close back within these previous channels, which were broken down from throughout the latest week after we saw a big escalation in trade war tensions between the US and China, and we saw an oversupply in oil inventories last week as well. As always, keep an eye on the API data on Tuesday and also Wednesday's oil inventories too. Another point worth noting at the moment, and this is the difference between Brent crude oil and WTI crude oil, is we've seen over 80% of retail traders are long Brent crude oil at the moment, and over 65% of retail traders are currently long on WTI crude oil, which suggests if we do start to see any sort of pause in price action here for oil going into next week, that Brent crude oil could very quickly start to roll over, and in fact we could get a meaningful retest back towards the lower end of the channels for Brent crude oil if we were to see no follow through going into next week. So just bear in mind that at the moment we've seen a big increase in retail positioning over the latest week, and that might turn out to be wrong if we do see another corrective pullback going into next week before we then set up for a rally later on this month. As I've mentioned before, it's very important that you have a research-driven process. Technical analysis is, of course, very useful, but if you are competing against other traders in the market who are also looking at technical analysis, where is your edge? What makes you better than the next technical analyst in this market? Well, essentially, you want to be looking at a research-driven approach, which breaks down the market into 3 stages. So you're going to be looking at trade flow, market sentiment, and also the positioning of retail traders versus hedge funds and money managers. So you want to utilize that data alongside cycles in the market, seasonality, marry that up with geopolitical news, real-time data, then utilizing fundamentals, and then finally looking at technical analysis to generate a trade idea. That's very different to just looking at your charts purely from a technical analysis point of view without having any other data points available to you. So with that, if you would like to learn a research-driven approach to the markets, there is, of course, an opportunity for you to join us at the Gold and Silver Club and join a community of successful traders. You learn a research-driven approach. You also get access to our exclusive live trading room webinars. You have real-time trade alerts, real-time trading research and market insights, access to our private Members Academy membership site, and also access to support and one-to-one mentoring. For more information about the service, please go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And also do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.